Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Monday, the 10th of December. Starting off with the EBR Holdings, where we're just following up on the price action of Friday. Ideally, the shares remain above the 50-day moving average at 5.37 pence. You can see, though, that in the recent past, it's a couple of days above the 50-day line and then down, so we're on guard against that. So no end-of-day close back below the 50-day line. The easiest thing probably here is to wait for a break of the November peak at 6.25. We hit 6.4 today, but an end-of-day close above that, which would then open up 8 and 9 pence plus over the near term. So just see how that develops. Next up, a stock which is my own favourite, let's say, in the near term. Just wondering whether there's anything going on here in a positive way at Lonmin. We've got the second break of the 200-day moving average at 48 pence. In 2 months. Obviously last time the situation failed, but this time looks a little bit more encouraging. RSI has been over 50 for the last few weeks as well. Obviously the stop loss here back below the floor of the May trend channel at 45 pence. Just see how the shares close, hopefully a weekly close above the 200-day line and 50 pence to then open up the chance of 70 pence. And next up, stock which seems to have a lot of retail investor interest at the moment, Mporium Group. Nice break of this falling wedge from April here at, what was that, around 5.25 pence, and above the 50-day moving average of 5.04 pence, above the 50-day line, looking for 6.5, 7 pence plus over the near term to get things going. On to the a stock which is a little bit behind the curve compared to Mporium, but may be able to rehabilitate itself. Comes in the form of Ncondezi Energy. Obviously, rather nasty price action for November, down again from 8 pence, which has been the troublesome zone for the shares. But the 200-day line still rising. The next cross between the 50 and 200-day lines, the 50-day is 6.3 there, the blue line, could be a golden cross, and so we're looking for a potential revival here. Ideally, we're back above 5.5 pence on an end-of-day close basis. That was support in September and October. And if this is a falling wedge, which it looks like it is from the end of June, then we could head at least back towards 8 pence again. So early bird chance there on Ncondezi. Looking on to, or going on to Oilex, as I said before, 50-day moving average has been the buying zone. Intraday dips below that, currently at 0.28, have been the buying zone for the last month. Today we peaked just below 0.4. Two strategies here, either to keep buying at the 50-day line or to wait for a break of 0.45. Possibly after all the jiggery pokery of the last month, you might want to go for the break of 0.45 as the strategy there on a technical basis. Wouldn't be the Bulletin Board Heroes without looking at Versarien, because I know how much it divides opinion. A bit of a Marmite stock, one could say. Just trying to break this falling wedge from July here. 130 is the level of the 50-day moving average as well. So end of day close above that, we could see a little run up for the shares. There is a lot of resistance between 120 and 130. There's been that for the last month or so, but it looks as though it's going to give way. And if it does, then if we hold above 130, then 160 could be the next target, the last October resistance on the way down. Finishing off with Valirx, which has updated the market today. Shares actually in a falling wedge formation. There's the 50-day moving average there at 1.5 as well, so we need to close above 1.5 to open up the possibility of a move towards 2.5, or at least the 200-day moving average at 2.39. RSI at 57, which is encouraging. It's been spoken above the neutral 50 level today, but we really do need to see this stock hold above 1.5 to open up the possibility of a little run to the upside. That's it from me. More updates